Hey guys, really excited to be here. Let's just jump straight into my project. So basically I built this AI trading platform that you're able to feed it your trading strategies in natural language, and it's able to back test it, perform P&L analysis, perform Monte Carlo analysis, as well as just see how it performs in the broader market, right? As well as see where you're exposed. So let's just get started. So let's say, for example, I wanted to buy the SP 500 on every time the 10-day moving average crosses above the 30-day moving average. This is a pretty common strategy. I just don't know how it works in real life, right? So I'm let's say I'm a retail trader. I just don't know how to build these Python systems, and I'm just doing it for fun, just getting into it. I want to see how it performs in the broader market. So I forgot to say, when do we sell? So let's say we sell in reverse, and as you see, it generates pretty quickly, something I'm really happy about. And as you see, it takes the last 10 days and the last 30 days. We're just gonna get it running just so we're able to see how it performs. So let's say we're going to take the strategy of 2019 because I want to see how it performs in a 2020 crash. And basically what we're going to do is we're going to take the data for the last 10 days as well as the last 30 days of the moving average. We're going to be feeding it into a signal. The signal basically detects golden cross and death cross. So if the AI is good, it's going to tell me that. So yeah, it tells me buy on golden cross, and it's going to tell me sell on death cross. So this is exactly what I was looking for, and I'm really happy that I picked up that. And if you notice, I told him buy the SP 500, but it understood that means the SPY. Start date and end date is up to you. If you want to look how your strategies perform in crisis is the most ideal part, as well as fees and slippage is something that we really want to look into. So we're going to be able to see our P&L analysis and see how much equity will we have after the days that we mentioned, as well as the drawdown. So something really important about the strategy is that the drawdowns are not so harsh. So we're looking at drawdowns of maximum 16%. Again, something that we really care about in this scenario. Something really important as well is a Monte Carlo situation. So if we're really risk adverse, if we're working for a hedge fund or a trading firm that really want to move away from risk or just minimize our Sharpe ratio, or minimize our risk and be in a good Sharpe ratio position, we really want to care. We really want to look at a Monte Carlo situation. So as you see here, in no situation I'm losing, or I'm not bleeding money. I'm not highly vulnerable to any trades. As well as you can see here, when exactly is it trading, when exactly is it buying. So if you're looking at the COVID crash, you're able to see that it sells right before the crash. It buys when the market bottoms, and it's able to sell once the market recovers as well. Something really interesting. It also gives you guardrails. So for example, if your timelines are too big, it's going to tell you it's testing on daily bars, or if it's too small, it's going to tell you the same, that, hey, we're looking at daily bars. Are you sure that this is the best metric, as well as you want to test it on your own. Something really interesting is that you can compare strategies. So let's say buy SP 500 and hold. You're going to be able to see it should generate just one block. There you go. And for the same timeline, we're going to see that the drawdown is much bigger. And again, for a retail trader, someone just getting into trading, just not going to know this. This is a great way for them to test it out, right? Just test out your strategies. And in this day and age where everyone that you see on TikTok and Instagram Reels is setting a course, there's so many trading courses online. It just seems like the get rich quick scheme. I just thought this would be a great idea to, as well as not only remove that friction in trading your strategies and make sure that you stay profitable, but it just lowers the barriers to entry, right? And just make sure that you know what you're doing before depleting capital, something that we really want to care about. So as you see, your equity is going to be much higher than our previous strategy. But if you care about drawdown, you're going to see this massive drawdown here. You're going to see down of 33%, which is more than double the drawdown that you saw before. So you're going to see this rash drawdowns in crisis situations. So this is what you basically get from just inputting your strategies here, as well as you see the Monte Carlo scenarios where you kind of bottom out here at 8,000, 9,000, some position you probably don't want to be in. But you see this one straight line just go close to 200,000, right? And again, you see the trades here, no trades because we're just buy and hold. And we also have the guardrails here. So it's really interesting how you can put any strategy that you want, and it's able to produce that. The only drawdowns that I see is that obviously I built this in one day. I don't have access to paid APIs. I just have access to my OpenAI subscription that is very effective to build these blocks, and it does it pretty quickly, which I'm super happy about. But I'm not able to have every single variable and every single metric that I care about. If I want to compare the London trading session with New York trading sessions, look where it bottoms up in the Japan trading sessions and compare it to the New York trading sessions, I'm not able to do that. So that's something where humans should step in, or just something where I want to scale, and I just don't have the capabilities right now. I would love to get some help around that, as well as, well, human in the loop is, of course, history matters, but you also want to make sure that you're looking at the right dates. So if you're comparing very short times, or you're comparing completely different cycle, you're comparing a bull cycle when we're about to enter a bear cycle, you're just going to look at the wrong data and the wrong and you're going to be depleting the wrong strategies, right? So as well as fees and slippage, it's just going to change your outcomes, not by much. And yeah, I feel like this project is a great starting point for someone getting into trading. And as I mentioned, it's more relevant than ever, right? So this is something that I wanted to build for myself. I want to increase the amount of data that I'm able to produce and variables that I'm able to work with. So these blocks over here, I want to be able to have bigger blocks, as well you can change it however you want, and that's something that I really enjoy, right? As well as I want to build more testing strategies. So I want to add Sharpe ratios, as well as maybe even combine it with a portfolio and add maybe bear spreads, bull spreads, as well as covered calls and covered puts is something that I really want to look into. Those are my future scaling strategies, and I mentioned my weaknesses to getting to there.